Markets are getting ready to react to the news that the U.S. economy actually shrunk by 0.3% in the first 3 months of this year.
The gross domestic product, that's the sum total of all goods and services produced in the country, was forecast to grow by 0.4%, but instead the economy contracted over fears of President Trump's potentially costly trade war.
To help put all this in perspective, let's bring in NBC News business and data correspondent Brian Cheung. So we're going to keep an eye to see. We know the futures were down heading into today. We'll see how the stock market actually reacts. But the fact that it was down a little bit, how big of a shock is that?
Yeah, well, it looks like it opened, at least the Dow Jones Industrial Average, down 0.7%. That's about 280 points. That's not necessarily a big fall, especially when you contextualize it against some of the really substantial 3-4% days that we had in the last few weeks of all this broad market volatility in the face of tariffs. But I think today's reaction is notable when you take a look at the futures going into the market open at 9:30. They sharply dropped at around 8:30 Eastern time when the Bureau of Economic Analysis released this report on GDP. This is a measure of economic growth. And they said that in the United States, the pace of growth for the first 3 months of this year, ending March 31st, was a contraction of 0.3% on an annualized basis. Now, I want to point out a contraction of 0.3%, especially when you consider that's an annualized rate, isn't necessarily all that bad, but it is the first contraction that we have seen in a while. And it does have some worry that if we get another consecutive quarter of contraction for the second quarter of this year, that would amount to the kind of unofficial definition of a recession where you have two back-to-back quarters of economic contraction. We did hear from the president on Truth Social. I don't want to jump ahead too much here, but he did note that this was something he was blaming on Biden. He said this is Biden's stock market. I didn't take over until January 20th, which is a fair point to make. But what is interesting about this GDP report is that the big reason for the contraction is that there were so many imports that were made during this quarter. And a lot of that was front-running by companies trying to get ahead of Trump's tariffs by ordering more ahead of time. A lot of that did precede January 20th. So, yes, it was during the Biden administration, but it was in anticipation of tariff policies coming under President Trump. So that's an important distinction to make here as we talk about these numbers.
Yeah, and people are pointing to that surge in imports as potentially why we saw this contraction. Does that mean that things could level out in the second quarter?
It's possible. But, you know, the idea here is that when you look at the calendar, the next quarter is going to be March until June. And in March, there was a lot of the waffling over the tariff policy. In fact, when it came to the so-called reciprocal tariff policies, we know that there was a 90-day delay on that. So even ahead of that, yeah, you're probably still going to have companies over that period of time that are going to say, okay, you know what, let me just order a little extra ahead of what is going to be a holiday season that a lot of companies are trying to order right now to make sure that stores are stocked and your products can be on the shelf by the time we get to October and November. So I do think that the import story is still going to remain relevant, but I want to point out that GDP is not just imports and exports. It's also things like consumption, how much you and me are spending, investment from companies, how much are companies investing in new factories, also government spending. That's a big part of this as well. Based off of what we've seen so far, again, it's only been an hour since this report came out. Those other measures seem to be pretty strong for right now. It really is the imports that was the main drag that took us into the negative read for this quarter.
Keeping an eye on all this, of course, is the Fed, which is sort of faced with this dilemma. Do they lower the interest rates to maybe try and stimulate spending a little bit more? Of course, the fear is if that causes prices to go up and the economy still sputters, you get stagflation or something. What is the Fed looking at right now?
Yeah, well, I mean, it's a real dilemma because usually in the face of economic contraction, what you'll see from the Federal Reserve is lowering interest rates. The idea is that you lower borrowing costs, you can stimulate more spending in the economy, and that could buoy economic growth. But this is also an environment where the Federal Reserve is still trying to tamper down on inflation. And if you're trying to tamper down on inflation, lowering interest rates could have the effect of making inflation go back up. So it's kind of stuck between a rock and a hard place. Fed Chair Jay Powell, who the president has been very, very critical of, he's been advocating, trying to get him to cut interest rates. The Fed Chair has said very adamantly, we are independent. We make our moves independently of whatever the president does. But of course, there's that question, does the president maybe want to try to replace him at the top of the Fed? He did say, a few days ago that he was not interested or looking at, firing his own Fed chair, who, by the way, he appointed during his first term. But again, this is just another layer of the complexity that we're seeing in the stock market. They don't know what the tariff policies are going to be tomorrow, and they also don't know what the Fed policies are going to be because Fed Chair Jay Powell is kind of in a jam now.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.